now let's bring in Michael Hewson, market analyst at CMC Markets in London. Michael, the market guessed the wrong way. The bookies guessed the wrong way. We saw all the safe havens being sold off. Everything was being bought, and now a complete reversal. Tell us how this took you by surprise and your actions for today to compensate.
Yeah, and I think that's why you're seeing such a significant market reaction today. Up until 10 o'clock last night, large amounts of money were being bet on a Remain outcome. There was a 90% probability, bookies were pricing a 90% probability that the UK would vote to remain in Europe. And ultimately, when the early results started to come out, that was completely turned on its head, with the resultant declines that you've seen in the value of the pound, in the value of the FTSE 100, in the value of the German DAX, and the flight back into safe havens. Bond yields, as you quite rightly said, have gone negative again. Peripheral bond yields are actually edging higher, and this is, I think, because of the political contagion that could result as a result of this vote. We have Spanish elections this weekend. I don't think we can underestimate the effect that this vote could have on the Spanish elections this week and this weekend, and ultimately, I think, the presidential elections in France next year, and obviously the German elections next year as well.
Okay, so Spain, Germany, France. We had Nigel Farage, the leader of the Independence Party, earlier today talking about the EU dying. That's a quote. Denmark, the Netherlands, Sweden, Austria. All those countries also seeing the sentiment to leave the stifling regulations, if you will, the trade bloc that is the EU.
That's right, and I don't think this is just about the EU, though. I think if you look at Jean-Claude Juncker and the head of the European Commission, it's part of it. I think the searing austerity that you've seen in Greece, in Spain, the massive amounts of youth unemployment, this is their chickens coming home to roost. Mr. Juncker only earlier this week said there can be no more renegotiation. This is as far as we will go on renegotiating. Well, that's backfired spectacularly in his face, and if this is mishandled by the politicians on either side, here in the UK or in the European Union, it could have significant consequences going forward for the future of the European Union.
Well, sure, I agree with that. Michael, I wanted to tell you, as we're looking at what the trading action underway, we certainly see everything off the lows of the morning. You're there in the thick of it. Right here at home, we are likely to see all 30 Dow components to the downside, with Goldman Sachs being the worst of the bunch, probably down about 7%, JP Morgan down about 5%. We could see Goldman shave off about 70 Dow points alone. Your thoughts on the trading action today and how it should be played? Where do you think we might end up at the end of the day, or close should be the more precise way?
Well, that is really a huge call. I mean, what we've seen, I think, is we've seen a significant rebound, and actually, in terms of where the FTSE is now, it's back to where it was around about 10 days ago, around about 6,000. So in the context of the move that we've seen over the past 10 days, you know, we might as well have forgotten about the rally that we've seen in the week since the beginning of this week. But I think the reason the banks are being hit particularly hard is the fact of the matter is the Federal Reserve is not going to be raising interest rates anytime soon. And if anything, you could actually potentially see an easing of monetary policy over the course of the next 6 to 9 months, particularly if this contagion spreads to the banking sector, particularly here in Europe, which is fragile enough as it is.
Michael Hewson, market analyst at CMC Markets in London, thank you for your perspective this morning.